Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms since 2003 for individual traders and professional institutions on a weekly basis. Anyway, let's get started. So, this is a market newsletter video for Thursday, June 30th, 2022. I'm also recording this for our subscribers for our standard newsletters that are playable and sent out, emailed out to folks. Anyway, again, this is the newsletter for Thursday, June 30th, 2022. We have one more day before the long weekend for 4th of July. Anyway, this newsletter is divided into 5 major sections. Before we get way into the market, I'm going to do a quick update on our mechanical systems, which have done a bang-up job this year. Hope that you guys are taking these trades. Okay. As far as the market, pretty good down day. Okay. Here's some headlines I saw. S&P 500, the first half, plunge of 21%, worst since 1970. NASDAQ finishes the first half down 30%, most since 2002. Tesla, the worst quarter ever. Amazon, the deepest since 2001. Steve and I have been calling this market a bear market since late December, early January. So we've been on the ball and we've called this well. All right. Now, quick things before I get to the market, guys, before I start everything. As I say here, tomorrow, Friday, is an important inflection day on the market. Very important. The indexes ended with long-legged doji candlesticks. And this is an area where the market's either going to magically recover, and we could have a big up day, like 50, 100 points on the S&P. Or we gap down and we go to new lows. Okay, so Friday is likely an important day. If the bulls are going to defend this and form a higher low, it has to go now. Okay. But what the market did today, it opened very weak, started with a large gap down. There was some hope yesterday that the S&P would hold the retest of the neckline from the inverse head and shoulder pattern, which did not. So we gapped down this morning. We sold off down to 37.39. Just a tad below the 61.8% fib retracement from the recent lows to the recent highs. So we had a little Pinocchio move down below there and then a reversal. Also, guys, when you ever have those important areas, you need confirmation, because a lot of times the market will trick you where they break a support level and then reverse. So be careful of little bear traps and head fakes. That's what happened there. The market had a pretty good rally that pulled back in the afternoon, so it didn't close great. Indexes were still down pretty good. We're still above that morning low. And again, like I said, the action for the market is likely going to be decided on Friday. Okay. Usually Friday, July 1st is bullish, but who knows? Obviously, you got to continue to monitor Bitcoin. That's part of what spooked the market. Tends to be a risk barometer. Bonds have been very strong. They put in a low 3 weeks ago. Remember, they had the nice doji candlestick. And commodities all got trounced. They've been having a pretty good correction over the last month, which we called for. Okay, big down moves in crude oil, natural gas, agriculture, precious metals. All right, so now let's go to the systems. So this chart shows you some of the trades that we've had on from the mechanical systems. This one here is SPY, and it went long via the bear long system. It took 2 entries down here, caught a nice trade. Now, that pullback on Tuesday took away some of that gains, obviously, because Monday was a big up day. But, still ended up being a nice winning trade. That system went back to cash on Wednesday, and then we had the same trade in both SPY and ES futures, which I sent out trade notifications for. At the same time, we also had one of our subsystems take a short. You can see this is the QE3 system. You can see it's done a lot of nice shorts this year. It took a trade last Friday on that big up day. So caught that high perfectly, and it's still short. So congrats if you're in this trade. So in case you're new here, we have 21 systems that look for trade opportunities on SPY and ES. Okay, and whenever these do a trade, I send out a trade notification to all subscribers. The systems have about 90% win ratio. Let's take a look at the trades for this year. So this table shows you the live called out trades for the systems for the SPY this year, the 21 subsystems. You can see all the trades that it has taken just since this year. We have data from the previous years that I'm not showing here, but I'm showing it for this year. One quick note, guys, these reversion to mean systems do better in high volatility bear market conditions. You can see they've done a lot of trades here. So these are, whenever I send trade notifications out for the SPY ETF, I send out we do trades in the ETF, and we do call options and put options. So you can see we had some call options for the bear long. And one of the options we closed out on Friday, which I did manually. That was great. That made almost $1,650. And then, of course, market pulled back pretty good on Tuesday, so we lost some of those gains, but we closed out the final here and then the first entry. So overall, pretty good. And for the year, if you took our option trades, you'd be up over $10,000. Again, that's just if you take the small numbers we're doing here. You know, I use this as a baseline. So for first entry system trades, we take one contract. For second entries, we do 2 contracts. For rare third entries, we take 3 entries. And it doesn't look like we have any third entries here. Actually, we do. Earlier in the year, we had a third entry here. Next, image number 4. Here's the ETF trades. You can see there's been 30 total trades. All right. And you can see the recent bear long. The ETF second entry closed out about a $787 gain, and that's only off of a $10,000 investment. The SPY first entry would still up slightly. I elected to keep that with a stop at 372.40. That was almost hit today, but we still have this open. That's the stop. Otherwise, all the SPY systems are technically in cash. Here's what you'd be up for the year. Again, that's just taking trades based on $10,000 for ETFs. It's very small. Finally, chart number 5, here's the trades this year for the ES systems. You can see there's been 27. So currently we still have this short open. I did take out close out one of them manually, which I show here, for about a $500 gain. And that's the MES futures. That's the micro. Obviously, if you took the standard ES, it would be 10 times that. And we still have, the trade is actually still open, which I show here. And once that closes out, I'll update the table. But again, these mechanical reversion to mean systems, they actually do better in bear markets, and that's what we're in. And hopefully you guys are taking these trades because they've done well this year. All right, let's move back to the general market. So item number 6 shows the index sector table, what transpired today and this week. You can see the indexes, Dow closed down about 0.8%, S&P 0.9%, Tech, NASDAQ down about 1.3%. Pretty good losses here for the week, down anywhere from 2.3 to 5% on the Tech, NASDAQ. As far as the market sectors, fairly broad-based sell-off, just a couple sectors up slightly, industrials, consumer staples, utilities. Most sectors are down for the week except for oil services and utilities. US dollar was down today. It's still up for the week, as you can see. It's been strong. Crypto's got nailed, and you got to keep an eye in this area, guys. Look at the moves for the week. If crypto, Bitcoin continues to melt down, that could be a problem for the market because it could cause, if you have some people blowing up there, margin calls, that's not going to be good for the general market. Commodities all to the downside today, except for a couple random ones, coffee and sugar, but big moves down in the DBC, crude oil, natural gas, gasoline, natural gas especially, and all the ags. And of course, for the precious metals, big losses today. And as far as bonds, high yield corporate was flat today, down big for the week though, and TLT up today, it's up for the week. Next. Item number 7 shows the economic news calendar. Again, tomorrow is July 1st, Friday. You can see what's on the docket here, ISM manufacturing, etc. All right, let's go and jump to the index charts. First chart below, item number 8, shows a snapshot of the 5 key major indexes with the Bollinger Bands. So what stands out here now are these long-legged doji candlesticks, okay? These can be inflection points. Like I said, this is an important area where we're going to see a miraculous recovery right from here. A long trigger could be the high of these dojis, or we're just going to go and make a new low. So this is an important areas. And like I said, if the market is going to continue some sort of bounce, it needs to occur right from here. Next. Moving on, chart number 9, here's a weekly view of the S&P. You can see big down week so far. Each candle is 1 week. You can see it's stalled right at the 9 exponential moving average. This is our KISS trend system on the weekly. And you can see it was long during the previous bull market. And it went to cash basically right there in early January. And this is basically going to stay in cash. The KISS trend system is designed to stay long in bull markets with a trailing type stop. That's what the DVTs are. We're in a bear market, so it's going to stay mostly out and in cash. Next. Chart number 10, here's the daily version of the KISS system. It's been mostly cash too, except for a little bit of time there in March, but otherwise it essentially exited back there in beginning of January. Okay. And you can see the latest rally stalled right at this ATR indicator, which we said would be resistance. That's where we stopped at. And now we'll see what happens on Friday with this doji. Next. Chart number 11, here's the various cycles. These have been pretty good as well. So first off, here's the daily time frame. And you can see on the upper left, we stalled at the ATR. These cycles have been pretty good. We had an end of bull cycle here where we bounced. We had a bear cycle here. So we'll see if we can hold this and form a higher low or not. On the half day, the ATR, that's the support. That basically matches with critical support. You can see we had a bearish rally show up a few days ago, and that obviously played out. And ATR is resistance on these smaller time frames. We have a DeMark 13 on the 2-hour here, and we'll see if we can get a bounce from that or not. Next. Moving back to the traditional charts, chart number 12, here's the daily S&P. Again, bear market begin back here. And you can see the progression. We have the long-legged doji here. Like I said, this is important. We're either going to go right up from here tomorrow, right away, or we're going to head back down and eventually tag this lower trend line. So Friday is an important day. I actually took some UPRO home long just because I think it's a good risk reward. I could have a tight stop. The only problem is the markets these days gap. Okay. We do have this unfilled gap back here at 44,020. So if we do form a higher low here and rally up, this would be a target area up around this maybe 50-day moving average. Next. Chart number 13, here's a 60-minute view. You can see this wedge-like pattern. Today, we sold off in the morning. We had a little Pinocchio move below the 61.8% fib retracement. That was an area to watch for a reversal, and we got it. Okay. Yeah, we had a little Pinocchio move down from there, but like I said, that happens a lot of times. You have a critical area, you'll undercut it and then reverse. But this is an important area. If the market's going to go, it needs to go right here. Otherwise, you can see this wedge pattern where you could easily sell off to the bottom of the wedge, form some sort of better bottom down in the lower, 3,500 area. Next. Chart 14, here's a 60-minute view just with the fibs. Again, this is the critical area to watch tomorrow. Next. Chart 15, here's a 15-minute view. So one thing we're monitoring, this is a potential count. The move off the June 17th low, you can count 5 waves up. You could also count it as an ABC, but one way to count it, the bullish view where you'd expect higher moves in the market would be as a 5 waves, which would be an ABC pullback to this 61.8 fib area where you could see we had a little head fake and then we reversed. Okay, if you're long, your stop could be right here or even probably here. Okay. Next. Chart 16, there's a 30-minute view. This shows you that potential, that case that would allow for another upside move. So you had a 5-wave move up here as wave A, ABC pullback as B, and then you have a 5-wave move up as in a C. You could see that unfilled gap at 40.20, which would be a likely magnet. So we'll see, guys. We'll see if this plays out or not. Like I said, if this is to play out, market likely needs to go up tomorrow. Finally, chart 17, here's the 5-minute view, shows you the action today. You can see the big weak open move down here where we got a little below the 61.8 fib I showed above, then we reversed. That was actually a buy opportunity, and it was choppy otherwise the rest of the day. Next, chart 18, here's the triple Qs. Daily chart, you can see the doji, long-legged doji candlestick here. So this is an important area. If we can get over the high of this doji, that would be potentially bullish. You have a potential wedge pattern here. If we sell off, though, we could sell off to the bottom of this wedge. Next. Chart 19, here's a 15-minute chart. Steve showed it in Wednesday's newsletter as a tight coil and obviously resolved itself to the downside right in the morning. Next. Chart 20, here's the daily KISS system for the triple Qs. As you know, it's been in cash this year as well, except for the time in March. Went long just for a little bit, then it quickly got out. And it too stalled right at this ATR here early in the week. Next. Chart 21, here's the cycles, time frames. Similar look to the S&P cycles, basically. Next. Chart 22, IWM small caps, similar look as well. Not as tight of a doji as the other indexes. Next. Chart 23, here's the 15-minute view. Again, we showed a coil in Wednesday's newsletter, and that obviously played out for a quick move to the downside this morning. All right, that does it for the indexes, guys. Like I said, likely to see some fireworks on Friday. Now let's look at a couple indicators. Chart 24, here's the VIX. VIX black candle today. Really not much to say with the VIX here. As you know, during this bear market, the VIX was unable to spike above this upper 30 area. I know a lot of technicians were looking for a big VIX spike up to the 40s and 50s before you had a good tradable bottom, and that never happened. Not saying that won't happen eventually. I do believe we'll see that in the bear market sometime, but it wasn't meant to be during this time. Next. Chart 25, here's the VVIX. Now this to me is a little more interesting. First off, one thing I want to point out, the VVIX, one of our pivotal areas is this 110 area, but the VVIX has been really low, and in early July it was down to the 89 area, and that ended up being a high for the market. And the VVIX fell to essentially the same spot, kind of like a double bottom, and it ended up being a high for the market too. However, the next chart to me is what's more important. So chart 26, this chart to me is kind of what stands out. So this is the VVIX, this is the S&P 500, and this here is the correlation between the S&P 500 and the VVIX. And you can see generally they're going to be correlated together, just like the VIX is correlated to the S&P. But when you have these periods of uncorrelation, when it falls below the zero line here, tends to occur near market inflections. That's where I added all these lines. A lot of them have been occurring near tops, but sometimes they occur near bottoms. Okay. And in early June, the VVIX uncorrelated with the S&P right at this peak. Now notice what's happening. It's right back to the zero level. It's getting uncorrelated. And we have this long-legged doji. So does this mean we could have a potential low or a high? Either way, expecting some fireworks. Next. Chart 27, here's high yield corporate. This to me was kind of the canary in the coal mine last week. The previous week it rallied up, stalled right at resistance here, which was previous support. Looked ugly. It's come down. Now it's right here at a potential double bottom. So what you would likely need to see for the market to bounce, you'd likely want to see this hold. Otherwise, the market tends to move where this does. Next. Next, chart 28, TLT 20-year bonds. They put in a pretty good low in mid-June there. Today they gapped over the downtrend line here. 50-day moving average is here above. However, the weekly chart is more important. Chart 29, here's the weekly chart. So 3 weeks ago, I pointed out this doji candlestick, hammered like candlestick here. And I said a valid trigger would be taking out the high of the doji with a stop here. This triggered the previous week, and you would still technically be long. And so this is basically this reversal candlestick has been playing out. You can see it has marked with divergence. Next. Chart 30, here's the yield curve. It's not negative yet, but it's getting close again. And remember, it did technically go negative back here early in the year. All right, so to me, it's already spelling a coming recession. And some economists now are already coming out and pointing to their lowering second and third quarter estimates, which again, to me, it's a given that the economy is going to go into a recession here. Next. Chart 31, this shows you the major sectors. I'm not going to go over all the sectors tonight. We'll look at a few of the individuals. Chart 32, here's XLE Energy. As you know, it's had a heck of a correction. Back here in early June, we pointed out this black candle doji. We said this area was extremely overbought. We were looking for a correction. With this down candle, we got a bearish evening star pattern. The bullish percent energy index is also at 95% back there. So this has had a heck of a correction. We had a little weak bounce coming down again. Quite honestly, I wouldn't mind it seeing coming down into this area. I do believe this will set up for a good long-term buying opportunity in the energy area though. Next. Chart 33, here's the 2-hour view. So you could account 5 waves down here on the 2-hour or the 60-minute view. We had a bounce to this resistance, pulled back. Now we'll see if we can form a higher low here or not. But we did have 5 waves down here for at least a trade. Next. Chart 34, XRT retail. Boy, this sector has been smoked this year, as you can see. Next, chart 34. Retail, we've already looked at this. This has been smoked, as you can see. Breaking another little pattern here inside this down channel. Could perhaps sell off to the lower channel line. Next. Chart 35, semiconductors also remains weak. It is near this lower trend line to monitor. Next. Following up on some individuals that Steve showed recently. So AMD, this had a bear flag here. Continues moving lower, had a bear flag back here as well. All these areas have been punished this year. Next. Chart 37, NVIDIA, same deal. Next. Moving to commodities, chart 38, DBC, had a little tight bear flag. This obviously played out nicely today. 38% fib is just below, and you have the 50-day and 200-day. We may see commodities come down to this 200-day moving average. It hasn't tested that area in a while. As we know, commodities have been in a bull market here. They've had quite a run. They've had quite a year, but they're in a much-needed correction. And this is something I talked about 2 weeks ago, was looking for this, and it's been playing out. Next. Chart 39, crude oil, also a nice pullback here. Notice that recent bounce attempt. Moving average ribbon, had a bearish squeeze underneath. This is your important support here. If it breaks this, crude oil is likely to come down to the 200-day moving average, maybe even down to here. We'll get some much needed relief at the pumps if that happens. Next. Chart 40, natural gas, big plummet today, down 16.5%. You can see it had a little bear flag move into the 9 EMA there and dumped. Next. Chart 41, copper, also remains weak, though the ribbon is pretty wide here, so it may need some sort of reversion to mean bounce again. Next. Chart 42, DBA, agriculture, also remains weak. In fact, it's below its 200-day moving average. So all these commodities have taken a pretty good hit. But the market hasn't really been able to do much, even with the commodities pulling back. Next, chart 43, Bitcoin. This area remains hoard, and this is an area you need to monitor. Okay, so still looks ugly, but we'll see what this does. You can see if it holds this low or not. My long-term target, guys, for Bitcoin is, or one of my charts point to 10,000, 10 to 12,000. I don't have that chart in tonight's newsletter. Next. Chart 44, Ethereum, also looks like death. Next. Chart 45, US dollar ETF, still holding up today. Well, very strong. It is down today a little bit, but no major changes on the chart. Next. Chart 46, US dollar, 60-minute view. Broke out of this coil. Pulling back here, still looks fine. Still looks fairly bullish. Next. Chart 47, Japanese yen. This area has been absolutely pummeled. One thing I'm watching, though, now is a potential falling wedge here on the Japanese yen. So from a contrarian standpoint, it's due for some sort of bounce, even though longer term they're in trouble. Remember, Japan is still inflating their currency. They're not tightening like everyone else. They're still pumping away. But anyway, you do have a pretty nice looking wedge here. Next. Chart 48, here's the ETF FXY, and this is a weekly. You got a nice doji candlestick. In fact, that could be a trigger for a long. You would go long 1 penny above this doji candle and a stop right at the low. Next. Let's move to precious metals. Chart 49, gold still remains horrid looking. Starting to break some support here. And again, the telltale sign has been the GDX-GLD ratio here. The stocks lead, and they've been lagging. Okay, they've been leading down, and that's always bearish for the metal. Next. Chart 50, here's the ETF GLD. In fact, the stocks are selling off more than the metal now, so we may see a delayed effect. You could potentially get a quick short on a break of this trend line for the ETF. Next. Chart 51, silver. Broke this big flag pattern, slightly undercutting this area. Next. Chart 52, GDX. Like I said, GDX has been weaker than gold, and the two, they lead. And because GDX has been weaker, I think we're going to see gold probably sell off pretty pronouncedly short term. So I took some short home on gold. You can see how GDX lost this big support area today. Next. Chart 53, here's the 60-minute view. Just continues lower. Next, following up on some previous trade ideas, chart 54, Oxy. Steve had this as a short on a retest of the 50-day declining 20-day moving average. This ended up being a nice short right there. You can see how the moving average ribbon is also bearishly stacked. Next, chart 55, Tesla, one to monitor here. It's in a big coil type pattern. It's going to have a big move once it breaks out of this in either direction. Next, chart 56, LCTX was a long idea in Monday's newsletter. So far, it's given a tiny trade. There hasn't been a lot of good setups out there, guys, quite honestly. Just these little low-priced biotech stocks. Next, chart 57, ICTI, one from Steve on last night's newsletter. It's still technically valid as a long if it can take out this trend line. I don't love the pattern. It's okay. Like I said, there's no grade A setups out there, quite honestly. Next, chart 58, BBW, potential short that Steve had on the newsletter. Next, Chapter 59.5, another short idea that he had in the newsletter. Let's show you some new setups. Chapter 60, UPRO. So, because, remember, UPRO is the triple long ETF for the S&P. Because there is potential for the market to bounce right from here off this doji, you have potential trigger here. The high of the doji, stop right here. And here are some previous dojis. You had one back here. That ended up being a pretty good trade. And you had a long-legged doji here and then one here. And that produced a trade. Again, you have to trigger, so you have basically a pretty good risk setup. If the market simply gaps down and goes lower, this never triggers, no big deal. But it is something to watch for potential long trigger if it does. Next, Chapter 61, SCO. That's the ultra short ETF for crude oil. Has this base forming. So want to monitor here for a further pullback in crude oil. Finally, Chapter 62, RXDX. Tight little pattern here. Looks like another biotech. Tight little pattern, good volume lately. So there you go, guys. Like I said, I'd keep it pretty simple for trade ideas. Only pick one or two. I'd stick also to ETFs. That FXY looks interesting. Japanese yen ETF. So that's about it. Let's see what happens on Friday. And everyone have a great 4th of July holiday weekend. If you're not, if you're not in the U.S., again, have a great weekend. And U.S. markets are closed on Monday for the 4th. And I'll be doing the weekend newsletter. All right. All right, guys. Have a wonderful evening. Take care.